The surge in fuel prices setting off alarm bells at the White House as millions of Americans start hitting the road for holidays and summer vacation. President Biden considering a temporary measure to bring pump prices down. Listen.
Are you considering a pause on the federal gas tax, Mr. President? We know that you're considering it, and Secretary Yellen spoke about it yesterday.
Yes, I'm considering it.
How soon can we expect a decision?
Well, I hope I have a decision based on data I'm looking for by the end of the week.
By the end of the week, he said there. But how effective would a measure like suspending the gas tax be? It saves, I believe, about 18 cents a gallon. And more importantly, what does it tell us now that oil is trading pretty much in tandem with the market these days? Joining us now is Denton Cinquegrana. He's the chief oil analyst at OPIS. It's great to see you again, Denton. Let's just start with the gas tax holiday. What impact would it have?
Sure. Well, like you said, it would drop prices 18 cents pretty much immediately. The one thing that I fear is that it kind of artificially stokes demand higher. And yeah. I think, honestly, we need a little bit of demand destruction to allow supply to catch up to kind of normal levels that we need to see for this time of year.
And my understanding, our friend Patrick DeHaan, Gas Buddy, has been tweeting about this, but is that gasoline demand in the face of these surging prices has within the past week been at the highest levels yet for 2022. It's supposed to rise in the summer, but it's rising in the face of considerable spikes in price.
Yeah, and you know, again, gasoline demand is actually not falling off as much as we probably would have thought with $5 gasoline. But again, you don't want to trust everything you see with your own eyes. But driving around this past weekend, everyone was out, and it looked like the economy was still doing pretty well by May. So, yeah. But again, it's a big country out there.
Well, we're below the inflation-adjusted price that we hit in 2008. So back then it was over $4 a gallon, but in today's prices, that would still be about $5.50. In other words, we haven't yet gotten to a similar pressure point as we saw 14 years ago when we then were tipping into a deep recession. And then the financial crisis makes you wonder what would have happened to gasoline demand otherwise. So do you expect demand to start falling?
I do. You know, once we get past, you know, kind of the early kind of surge of summer travel, you know, you have a couple weeks of June where it kind of calms down. Then you get into 4th of July. And after 4th of July, things kind of tend to level off. But again, when it comes to supply and demand, obviously, and prices, you know, kind of all bets are off for July and August because there's still a lot that can happen.
Do you think oil and gas are up today because of the growing possibility of a gas tax holiday? Because to your point, it would mean more demand.
No, I think actually you mentioned it before that, you know, oil has been moving a lot more closely with the S&P 500 over the last couple of weeks or so. I think it's getting a little bit of a bounce based on the strong move in the stock market. Obviously today we're up about $1.50 to $2 at the moment. So again, after falling by about 9% last week, it's a pretty small bounce, but it's a bounce higher nonetheless to about, you know, 111, 112 for WTI and a few dollars more for Brent.
Do you take a lot of signal from the fact that they're trading together these days? Because the obvious conclusion to reach here is that it's more about, you know, it's risk on, risk off, growth on, growth off, recession on, recession off, and that's now the trade.
Yeah, and again, it's working right now, but there's been times in the recent past where we've seen the two really kind of disconnect from one another. Right now, really the fundamentals don't necessarily support a sharp drop in oil prices or gasoline prices either. So right now, I think it's a movement with the larger, you know, risk assets like you mentioned. And again, it could disconnect at any time and really kind of pop higher when the S&P might be falling off a little bit.
The global swing factor is still Russia supplies, which are now rippling through the entire energy markets as Europe tries to switch to coal and the gasoline gets some lift from replacement demand. Where is this all going? If we continue the status quo as we start to head into the fall and then winter, how is that additional stress on the markets likely to impact what Americans are paying for what I notice is a lower natural gas price this morning?
Yeah, one of the things that here in the United States, we're blessed with pretty much abundant natural gas, and it's cheap natural gas at least compared to Europe, where you're looking at European prices in the $40 per MMBTU area. Right now, we're about $7 here in the U.S. at the Henry Hub futures delivery point. So again, blessed with cheap natural gas here versus Europe, which is really kind of dependent on obviously imports from places like Russia and others, but also from the U.S. and with the LNG facility down for the first, you know, through late this year, that creates a further problem for Europe.